Good morning, everyone. Uh, I apologize for being late. There probably is no excuse whatsoever. So, gonna start it out by saying I apologize, but hot damn, what a morning! What a morning! It is 4:30 over here in California, and I didn't expect to see all of this on a Monday. I knew the earnings were coming. I just did not think we were going to get all of the news that we got this morning. Guys, we have so much to go through. It's insane. Like, I literally thought it was just going to be the earnings. This is a great morning. A great morning. A great morning. All right. So let's start out with, of course, the earnings. We actually have the conference call, I believe, in about 20 minutes over here. And apologize for a little bit of delay with starting things up over here. I literally just turned my computer on. So, wow. I'm just still in shock right now. So, let me bring up my favorite people to get this information from. Here we go. Obviously, there's a lot of people who are way ahead of this than that I seriously was, and they even spoke about it in detail in the spaces last night that I was just listening to. One of the guys is Marcos. The other one is, of course, Mike Alfred, Franz Backer, and the other fellow who probably is one of the important ones as well was talking like specifically about the structure of a deal that Microsoft signed with IREN. And I know this is supposed to be a Cipher streaming, but I mean this is all just bullish. No, it's not bearish for Nebius. This is bullish for all of it. And obviously, the news is much bigger for IREN because of the significance of the deal and the fact that IREN never actually announced a deal with a major hyperscaler yet. So that's like, well, also IREN signed two deals with Dell and Microsoft. Um, but the Cipher deal is surprising as well because those earnings were actually pretty good. But then AWS came out. So you had Fluid Stack, which they were actually providing a co-location with, which is backed by Google. And then that was like about a 5% stake. And then AWS comes out and says that they're signing a $5.5 billion deal. And I want to go through the details with that. Like, I apologize. I was trying to read up on it. I'm just like, you know what, let me just get in this stream and just read on it with you guys, with you ladies and gals. But what a crazy morning. What a crazy morning. All right. So let me just bring this up over here. All right, so let's go over the Cipher deal first. All right, and I sorry that the IREN deal first, and the reason why is because we're going to be talking about Cipher for a long time. So the news of why IREN is up over 25% pre-market is because of this. Okay, see, the thing is that we all knew this was going to happen. Okay, the market obviously bid up the stock ahead of time because they knew this was going to happen. They just didn't know how big it was going to be, and they definitely didn't know that it was also going to include a $5.8 billion deal with Dell. So just reading the press release, under the agreement, IREN will provide Microsoft with access to where's the exact number? It just says NVIDIA GB300 GPUs over a 5-year term with a total contractual value of $9.7 billion and a 20% prepayment. Man, can somebody tell the name of the gentleman who was also talking in the same spaces with Mike Alfred, Franz, and Marcos last night? Because he literally called us out. And I'm sure a lot of them did, but like it was just really interesting to see these guys really dig into this stuff and really know their stuff to expect it. Anyways, the GPUs are expected to be deployed in phases through 2026 at IREN's 750 milliwatt Childress, Texas campus, in conjunction with delivery of new liquid-cooled data centers that will collectively support 200 megawatts of critical IT load. So this is in the Horizons. This is in the Horizon data center. So they got a Horizon 1 and 2. Remember, guys, they're building a much larger data center, and that's not going to be online for a couple of years, but that's over 2 gigawatts of additional capacity they're building out. And I don't know, like when I see something like this, like we're going to see a lot more of these deals come up with IREN. This is the reason why IREN had the most expensive valuation out of all these other miners, because they're building it at scale, and also they're a whole stack. Like they build a software on top of the infrastructure as well, and they own on land. And anyways, we'll get a little bit more into that one. Daniel Roberts, co-founder, co-CEO. So it's actually two brothers that own the company, which is pretty, or not own the company, have majority stake in the company, which is just really interesting to see when I was digging through this. But anyways, we're proud to announce this milestone partnership with Microsoft, highlighting the strength and scalability of our vertically integrated AI cloud platform. Note AI cloud platform. They own the whole platform. Going to keep on repeating that one. This agreement not only validates IREN's position as a trusted provider of AI cloud services, but it also opens access to new customer segments among hyperscalers. There's going to be more stuff coming up. There's going to be more stuff coming up for sure. It marks another major step forward for IREN as we continue to expand large-scale GPU deployments across 3 gigawatts of secured power portfolio in North America, reinforcing a position as a leading AI cloud service provider. 2.91 gigawatts, I believe. It's just unimaginable. I literally did not think I was gonna wake up to this news. Anyways, I want to leave Franz's Twitter on here. All right, I'll just post that for you guys, just to, of course, give him credit for that one. But, whew, wow, what a morning! All right, yeah, I got to change my style. Everything always changes. I'm getting used to Restream versus StreamYard, but I'm really liking Restream more. But yeah, what a crazy morning! So now that is just the Microsoft deal. There's also a Dell deal as well. A Dell deal. All right. So yeah, we had the upgrades that quickly came in for people that apparently didn't know about it, and I'm pretty sure they knew about it. Where is the Dell deal? All right. Man, I didn't think I was gonna wake up to this. This is pretty freaking insane. Oh, this guy's really good too. I follow him a lot for newly minted information. All right, so do they have the Dell deal here too? It looks like a lot of people are focused on the Microsoft contracts. I think that's what they released a press release for. But anyways, the Dell deal is about, I think it was like 5 point something billion dollars. $5.8 billion, and that's mostly a hardware purchase. So that one isn't necessarily, well, actually, both of them. Well, one of them is for a cloud deal, but the other one is more of a hardware deal. But when you have that much capacity in the pipeline, like you're going to be signing a lot of these sorts of deals. And I think everyone's always wondered. When I say everyone, obviously not the people who are on here, but the Bears, right? They're always looking for a way to discriminate why these companies are spending so much money on infrastructure, and that, look, it's not going to return anything and so on. But it's just, when you have all these hyperscalers continuously pumping money out to build a lot of infrastructure, and yes, a lot of it is toward ASIC chips, which Amazon did say with its Trainium processors, you're still going to need to build the underlying infrastructure for it. And these hyperscalers can't build it fast enough. So that's why they go to these XBCC miners, and that's why they go to NBIS, because they can build it much faster. And if these hyperscalers were to build it out themselves, they'd have to deal with all the overhead and everything. And on top of that, it probably wouldn't be nearly as cheap as opposed to these guys building it, because these guys already booked all the power, the land, and everything ahead of time, because they knew something like this was going to come. So I don't know what to say. I mean, I think there's going to be further upside for a lot of these companies. Did IREN hit a new all-time high? Let's check it out here. I want to pull this over here real quick. 1 second. Let me just check. All right. I want to see what the stock prices are. It touched $78. Good gravy. Good gravy. Dude, honestly, what did I don't even know what I woke up to. I thought it was just going to be the earnings for Cipher. Apparently it's not. Apparently there's more. There's deals. There's deals everywhere. There's deals. Think of that. Think of that picture with the hot dogs. It's like now just deals with hyperscalers. All right, I apologize. If I insult anyone there. It's just been a crazy morning. Crazy morning. All right. Let's go ahead and just go over the Cipher earnings. We actually have the earnings call coming up very soon, so I want to go over the Cipher earnings. And by the way, there's also a Cipher. There's also a Cipher deal with AWS. That one was it's just I don't. I guess I should have woken up earlier just to go over all this crazy stuff. Like this is just the most insane stuff to just wake up to. Like I did not think anything was going to happen this morning at 4:00 a.m. here in California, but apparently, apparently a lot of things happen in California or in the world at 4 a.m. All right, so I mean, these guys are going to need to raise capital. Like they're gonna need to raise capital. Like if you're coming into this hoping they don't raise capital, you guys got nothing coming to you. Like they or whoever it is, you got nothing coming to you. They're gonna raise capital. All right, so Cipher secured a $5.5 billion 15-year AW lease and majority control of a 1 gigawatt West Texas capacity, material capacity. So this one is pretty similar to the way the Microsoft deal is structured. What we got to remember with Cipher is that Cipher isn't necessarily a full stack owner in these cases. They do own everything on the infrastructure standpoint, or most of the things on the infrastructure standpoint, but they're really providing the capability for a lot of these other companies to have access to all this infrastructure. So they're not building the entire cloud software on top of it like Nebius or like IREN is doing. They're more of allowing companies like FluidStack to co-locate on their own campuses, or they're allowing people to actually access their hardware and build their own software on top of it. Now, they probably could in the long run, and I need to look more into this one specifically. Mike Alfred was talking about it over the weekend, where CleanSpark and Cipher have the option to do that later on. But as it is right now, Cipher and CleanSpark are not necessarily building that AI cloud today or have access to an AI cloud today. They're just providing the infrastructure for it. So you have infrastructure as a service, you have platform as a service, which is basically what Nebius and, well, not necessarily Nebius. Nebius does a lot more than that as well. What IREN does, and then you also have software as a service, which is another layer like a Salesforce or a Snowflake or something. But IREN is on that first layer. Or sorry, Cipher's on their first layer, and they might do it one day. They just don't do it today. Okay, so the earnings for Cipher, real quick. All right, so Cipher reports a $72 million non-adjusted EPS of 41 million. Non-adjusted earnings of 41 million, and they announced the 15-year data center campus lease. So they're allowing AWS to co-locate or basically use their infrastructure or have their own infrastructure built into their Texas campus. So it's a 15-year deal, and we're probably going to get more details on that one as the time comes, or maybe they're going to ask about an earnings call. But that's a 15-year lease agreement, $5.5 billion. It is initially at a 300 megawatt capacity, and it's basically, like I said, it's going to provide all the infrastructure for the air, the cooling, and the access to the hardware and all that stuff. So, they're going to ask, they're definitely going to ask about this on the earnings call. A lot of you guys are probably in Cipher. For me, I told people on the Discord, look, I'm gonna just nibble on Cipher before the earnings, before the report, and I didn't get that great of an entry on it. I think I got in like around $20.50. But my real money is on, or my big money is on Nebius, and it's on IREN. Cipher, I think they could definitely catch up. I think they're going to do just fine. But like when it comes to like a wholly bullish, like owning everything, that really, I would actually argue that IREN it does own everything for all of their sites. Nebius does do some co-location. They do own a lot of the top to bottom with a lot of their other sites, but it, IREN is the pure play when it comes to owning everything. Nebius has a lot less, a lot less concentration in their core business because they do have their other business as well. IREN is just like more the pure play thing. And Cipher, I think, like, who knows, one day, maybe one day they'll start building their cloud on top of it, but that's not not the case today, which doesn't mean, it just doesn't mean that it's bearish or anything. It just means that they don't do that today. So I'd imagine if they do that later on, that's going to become a big deal when they do it later on. All right, so these are the terms of the deal. 10-year AI hosting agreement with Fluidstack and Google. We already know about that one. 15-year data center campus with AWS to support AI workloads. And we already know, I basically went over most of the details on that one. All right, so do they have a slide deck in here? No, they don't have a slide deck. So what they've got to remember also with these Bitcoin miners is that like most of the revenue that they get today is not going to be super important for me. Because look, guys, they're already profitable businesses with Bitcoin mining, and they have to continue the Bitcoin mining for now until they fully build out everything as they make that pivot. Because the key word is a pivot. It is not like let's drop everything and start burning more money and start getting into AIs and data centers, right? Like, no, they have to pivot into it because that stuff takes time. Fortunately, these guys are not noobs at it where they can actually do it at a much faster pace than someone who's just starting out of nowhere. But I mean, all these numbers right now are just not going to be super crucial. Like it's not going to be so important. Like, oh, they didn't grow. They only grew like maybe 75%, whatever it was. I didn't see the amount of revenue that did grow at. It's you're looking at the deals that they're going to bring in. You're looking at the money that's going to come through the door. You're looking at it about how much capacity they are building out and plan to build out, and that is a number you want to look for. The available capacity in the future, because then you get deals like this coming through the door where they're going to become a lot more recurrent, especially with the hyperscalers, but also even with smaller clients, right? Or it doesn't even have to be a hyperscaler. It could be, for example, Dell with IREN, where they're signing hardware deals over there, where like they just want to rent out the actual hardware or access to the hardware versus renting out the full stack. And it seems like Microsoft is a similar thing with them, with IREN, because they just want to have access to the hardware. It's like, look, this is the reason why Amazon and Microsoft are signing up with these people and Dell is signing with these people, because they can't build it as quickly on their own. They need access to everything in the near future because like we've heard from Meta, like we've heard from Google for Google Cloud Platform, like we heard with AWS or Amazon, Microsoft, and all these other companies, there is not enough supply to meet the demand. All right, so we got the earnings call coming up soon. Let me just bring this up on the side. Let me just hold on. This one brings it up over here. A bit more deals. You guys can check this one out. It's a funny thing, like this guy didn't really post that much until recently. And now he's like coming out of the woodwork. Whoops. And he's like posting everything. So good. So much available content on Twitter. I'm just bringing it to you guys through video and also through my Twitter. But like, dude, there is such a big community with this stuff. All right. So I'm going to bring up the earnings call on the side for Cipher. Go. Oh, they even got their earnings presentation right here. We'll dig into that one too. We're going to reshare this screen real quick. I know, right? I just woke up, so my bad. Oh, that says that X Lake doesn't work. There you go. Okay. Can you guys hear the sound? You should be able to hear it. Anyways, I'm just muting that one for now. Or actually, I'm gonna mute it. I'm just gonna make it a little bit lower. Okay. Gonna make that one a little bit lower. And I want to switch here. Crazy morning. What is this? I don't know what music this is, guys, but when you're printing, does it really matter what kind of music you're playing? Does it really matter? It's so funny. Like, his stock is up like 20%. It's like, what is this music? It's like, I don't know. Oh, wow. All right. I'm going to have to dig through this stuff during the earnings call. And, oh, no. It's like, they just replayed the MIDI file. That's all they did. All right. So, let me just go over this real quick. I'm listening to the earnings call in the background, so I'll change it when they start. All right, so 300 megawatt capacity. Oh, I think they're starting. Okay, they're starting. Let me share this one.
2025 Business Update Conference Call. After the speaker's presentation, there'll be a question and answer session. To ask a question, please press star 11 on your touchtone telephone. To remove yourself from the queue, please press star 11 again. As a reminder, this call may be recorded. I would like to turn the call over to Courtney Knight, Head of Investor Relations. Please go ahead.
Good morning, and thank you for joining us on this conference call to address Cipher Mining's business update for the third quarter of 2025. Joining me on the call today are Tyler Page, Chief Executive Officer, Greg Mumford, Chief Financial Officer, and Edward Farrell, Senior Advisor and former Chief Financial Officer. Please note that our press release and presentation can be found on the Investor Relations section of the company's website, where this conference call will also be simultaneously webcast. Please also note that this conference call is the property of Cipher Mining, and any taping or other reproduction is expressly prohibited without prior consent. Before we start, I'd like to remind you that the following discussion, as well as our press release and presentation, contain forward-looking statements. These statements include, but are not limited to, Cipher's financial outlook, business plans and objectives, and other future events and developments, including statements about the market potential of our business operations, potential competition, and our goals and strategies. Forward-looking statements and risks in this conference call, including responses to your questions, are based on current expectations as of today, and Cipher assumes no obligation to update or revise them, whether as a result of new developments or otherwise, except as required by law. Additionally, the following discussion may contain non-GAAP financial measures. We may use non-GAAP measures to describe the way in which we manage and operate our business. We reconcile non-GAAP measures to the most directly comparable GAAP measures, and you are encouraged to examine those reconciliations, which are filed at the end of our earnings release issued earlier this morning. I will now turn the call over to our CEO, Tyler Page. Tyler?
Thanks, Courtney. Good morning, everyone, and thank you for joining us today. I'm Tyler Page, CEO of Cipher Mining, and I'm pleased to welcome you to our third quarter 2025 business update call. The third quarter was truly transformative for Cipher as we made huge strides on our strategic pivot into the high-performance computing space and set the stage for what is, without question, the most exciting earnings update in our company's history. This quarter, we executed a pivotal transaction with FluidStack and Google, which firmly established our credibility in the HPC space. Following that groundbreaking transaction and leveraging that success, we've now taken another major step forward. I'm thrilled to announce today that we've executed a second landmark HPC transaction, this time with Amazon Web Services. Partnering directly with one of the largest and most innovative companies in the world underscores Cipher's emergence as a trusted leader in next-generation compute infrastructure and confirms our full-scale transformation into an HPC data center developer. Our first HPC deal with FluidStack and Google established not only Cipher's credibility as a data center developer for the world's most demanding tenants, but also the desirability of more remote areas of Texas for next-generation data centers. We have been talking to investors for over a year about this thesis and saying that we thought the market would evolve in our direction. Our second long-term lease, this time with Amazon, proves that neither we nor West Texas are one-hit wonders. Our second lease faces the world's largest hyperscaler directly on a 15-year lease at very attractive terms. This is not a fluke and will not be our last HPC deal. Under the agreement, we contracted 300 megawatts of gross capacity, and the project carries approximately $5.5 billion in contract revenue over the initial 15-year term. The capacity will be delivered in two phases beginning in July 2026 and completing in Q4 2026, with rent commencing in August of 2026. Given the strength of the lease we have secured, we believe that we will utilize debt financing to fund the majority of construction costs at the site, and any remaining construction obligations will be funded from cash on hand, with no need for further equity fundraising. With these milestones, Cipher has officially arrived as a leader in the HPC revolution, harnessing our sourcing expertise, energy assets, best-in-class team, and operational excellence to power the world's most advanced computing workloads. Continuing with that momentum, we're proud to announce today that we've secured ownership in a joint venture to develop a 1-gigawatt site in West Texas. We expect to own approximately 95% of the JV once a turnkey HPC lease is executed, assuming standard lease and development terms. We are calling the site Colchis, which refers to the mythical home of the Golden Fleece and was a land of legendary wealth located at the edge of the known world. For the past year and a half, conventional knowledge in the traditional data center industry has been that hyperscalers would not venture outside of major metropolitan areas, and that our sites were at the edge of the world. But we have now conclusively proven those incumbents wrong. We will continue to do so at Colchis. This is the most significant addition to our development pipeline to date. This site features a fully executed 1-gigawatt direct connect agreement with American Electric Power, providing dual interconnection capability and targeted power availability in 2028. The transaction also includes options to purchase up to 620 acres of land adjacent to the existing substation. The Colchis site checks every box for a premier HPC development opportunity. Ample acreage, large-scale power capacity, availability of diverse fiber routes, and dual interconnection capability. We have already begun to have early-stage discussions with potential tenants for the site. The execution of this transaction once again demonstrates our team's sourcing expertise and ability to secure some of the most attractive large-scale sites in the world. Cipher is one of the few companies in the world that can combine boots-on-the-ground expertise, working directly with landowners to source best-in-class sites with the deep technical sophistication needed to serve hyperscalers. This unique and powerful combination makes Cipher exceptionally well-positioned to bridge the growing gap between the limited supply of suitable sites and surging large-scale tenant demand. The announcements we shared today are the results of years of hard work and the strong execution and momentum built over the past quarter. I'd like to take a moment to reflect on some of our third quarter successes. At the forefront of these highlights is our recent transaction with FluidStack and Google, a transformative 10-year, 168 critical IT megawatt AI hosting agreement that first positioned Cipher as a major developer in the HPC space. Under this agreement, Cipher will deliver 168 megawatts of critical IT load at our Barber Lake site in Colorado City, Texas, supported by up to 244 megawatts of total capacity. This project represents approximately $3 billion in contracted revenue over the initial 10-year term, with options that could extend total contract value to roughly $7 billion over 20 years. Notably, construction is already underway at the site, and we are on track to deliver the full 168 megawatts of critical IT capacity by September 30th, 2026. Importantly, Google is backstopping $1.4 billion of FluidStack's obligations to support project financing and will receive warrants representing roughly a 5.4% pro forma equity stake in Cipher. Cipher will retain full ownership of the site and is in the process of securing debt to fund construction. We will provide more details around that construction financing in the near future. We believed and have now proven that Barber Lake was just the beginning, the first of several projects to capitalize on our team's sourcing expertise, proven development capabilities, strong industry relationships, and unmatched construction track record. We look forward to continuing to partner with leading technology companies to secure HPC leases at our growing pipeline of sites. This expansion is well supported by our successful $1.3 billion convertible offering completed this quarter. This was the largest digital infrastructure convertible issuance to date and was roughly 7 times oversubscribed, demonstrating investor confidence in our strategy and pipeline. The strong demand allowed us to take advantage of favorable market conditions, securing a 0% coupon and further strengthening our balance sheet. Greg will discuss the convertible offering in further depth later on the call. The Amazon transaction, the FluidStack and Google transaction at Barber Lake, the addition of significant new capacity at Colchis, and our successful convertible offering all represent major milestones in advancing our HPC strategy. Together, these achievements expand our business model, secure substantial future capacity, and strengthen our balance sheet, all positioning Cipher to capture the tremendous demand we're seeing and play a critical role in building the next generation of AI infrastructure. As we scale and expand our business model, our Bitcoin mining business continues to generate meaningful cash flow. The company surpassed expectations this quarter and is now operating approximately 23.6 exahash per second of self-mining capacity. The same disciplined foundation we established in the Bitcoin mining space, delivering 5 data centers on time and on budget, will fuel our successful expansion into HPC. I'd now like to provide a brief overview of our energy portfolio, which highlights our execution across business lines and the strength of our pipeline going forward. On the mining side of the business, this quarter, we brought Black Pearl fully online, which grew our operational mining capacity from 423 megawatts to 477 megawatts across Odessa, Alborz, Bear, Chief, and Black Pearl. In doing so, we exceeded our previous hash rate projections and achieved a total self-mining hash rate of approximately 23.6 exahash per second. In addition, our fleet efficiency stands at an extremely impressive 16.8 joules per terahash, making us among the most efficient miners in the industry. Our proprietary software, which allows us to dynamically curtail our data centers, has proven to be a critical advantage in optimizing for profitability, maintaining low power prices, and monetizing older rigs. This area of expertise is expected to remain a key competitive advantage in the future, and in fact, may be an increasingly valuable aspect of the business as the HPC landscape continues to evolve. Importantly, our current mining operations are fully funded, and we do not anticipate further investment in that side of the business as we prioritize our pipeline toward HPC. As discussed, this was a monumental quarter for Cipher in that we grew our contracted AI hosting capacity from 0 last quarter to 544 gross megawatts this quarter across 2 transactions with world-class partners. Behind that, we have a robust pipeline of 3.2 gigawatts of future capacity that spans from 2025 to 2029 and beyond. While we are extremely proud of our mining production, market dynamics, scarcity of energy capacity, and frenzied demand from tenants has made it clear that the best use of our extensive pipeline of sites is for HPC workloads. We are in ongoing discussions on our pipeline with leading partners and look forward to prioritizing all of these sites for HPC development. Let's now turn to a review of our current operations on both sides of the business. At Barber Lake, we are constructing a data center for our industry-leading partners, FluidStack and Google. Construction at the site is well underway. Ground has been broken, and both engineering and procurement are progressing smoothly. We've secured the necessary labor force and locked in most of the long lead time equipment, putting us in a strong position to meet all key construction milestones on schedule. We are firmly on track to deliver the full 168 megawatts of critical IT capacity by September 30th, 2026. The lease is anticipated to commence the following month in October 2026. Note that we still retain 56 megawatts of current capacity at Barber Lake. These additional megawatts allow us to pursue an additional co-location agreement, potentially prioritizing different deal elements, or to deploy our own compute at the site. Our team is carefully assessing the merits of all potential options to maximize the value of the remaining 56 megawatts in phase 1. In addition, we maintain an MOU on an additional 500 megawatt upsides at the site, which would come online in 2029 to 2030. Given the site's ongoing development potential and live deal discussions, we look forward to providing further updates as things progress. Turning to our current mining operations, slide 9 has a production summary across our 5 operational mining sites. Odessa is still the most significant part of our portfolio, representing approximately 56% of our Bitcoin production in Q3. As of September, the current operating hash rate at the site is approximately 11.3 exahash per second, using approximately 207 megawatts. Odessa's fleet efficiency stands at roughly 17.6 joules per terahash. On this page, we also provide the observed all-in electricity cost per Bitcoin at our 5 sites. Moving down the page, Black Pearl began contributing significant cash flow to the business in the third quarter. The first 150 megawatts at the 300 megawatt site are currently mining at approximately 10.1 exahash per second, exceeding prior guidance and contributing approximately 36% of production this quarter. Fleet efficiency at the site stands at...
So just wanted to interrupt the call real quick. They're going over the Bitcoin mining portfolio, okay? This is what's bringing them money into the door right now as far as a near profitability standpoint. Is this critical to me right now? Probably not. That's not my... I'm not buying this for the Bitcoin mining portfolio. I'm buying this company for the expansion of its AI infrastructure and cloud portfolio. They might switch to the cloud later on, but right now, this is what this one's about. They're talking about the Bitcoin mining profitability segment. Now they're jumping into the good stuff.
Oh, yeah. Slide 11 provides an overview of our next to energize site in Andrews County, Texas, called Stingray. The site features 100 megawatts of front-of-the-meter capacity, all necessary regulatory approvals, and 250 acres of land adjacent to the transmission assets. In the third quarter, we continued development of the substation for the site and secured long lead time items, including transformers and high-voltage breakers. The site is on track to energize in the fourth quarter of 2026. Slide 12 outlines additional capacity spanning 2027 and beyond. Releasee, located in Cotulla, Texas, is on track to energize in Q2 2027. The site is fully approved for 70 megawatts, and we have initiated development of the substation. Given both Stingray and Releasee have secured interconnect approvals and established energization timelines, We've engaged with multiple prospective tenants and are in ongoing discussions to secure the most attractive lease agreements for these locations. Our three M's, Mikeska, Milsing, and McLennan, are all currently undergoing final interconnection approval processes, and load studies have been completed at all three sites. The interim Encore FEAs have been signed with Encore for Mikeska and McLennan, and the required deposits have been paid. We're targeting up to 500 megawatts of capacity at each of these sites. In addition to interconnection rights, our purchase options also include significant land parcels at each location, all of which are well suited for HPC data center development. We are confident these sites will be in high demand as development progresses. Last on this page is Colchis, which, as mentioned, is our latest site acquisition and the most substantial addition to our pipeline to date. The site features a fully executed 1 gigawatt direct connect agreement with American Electric Power, providing dual interconnection capability and targeted power availability in 2028. The site is roughly 80 miles southwest of Abilene and around 80 miles southeast of our Barber Lake facility. As mentioned, the site is extremely well suited for HPC given its ample acreage, large-scale power capacity, availability of diverse fiber routes, and dual interconnection capability. Last quarter, we discussed our strategy to position Cipher ahead of the curve in anticipation of the evolving AI data center landscape. Since then, we have executed 2 landmark HPC transactions, as well as our most significant pipeline addition to date. With the industry moving even faster than we had anticipated, we are more confident than ever that Cipher is among the best-positioned companies in the world to seize the near-term opportunities created by the growing power shortfall. Simply put, we are just getting started. I will now turn it over to our new CFO, Greg Mumford, for a review of our third quarter financials.
Thanks, Tyler, and good morning to everyone on the call. I'm excited to join today's call as Cipher's new Chief Financial Officer. It's a privilege to be part of such an innovative company that's playing a key role in the evolution of digital infrastructure and high-performance computing. I want to start by expressing my gratitude to Ed Farrell for his leadership and many contributions over the past 5 years. Ed has built a world-class finance organization and leaves behind a strong foundation that positions Cipher well for its next phase of growth. The company is fortunate to have his continued guidance as a senior advisor during this transition period. As I step into this role, my focus will be on maintaining a disciplined approach to our financial strategy, broadening access to new funding sources, and optimizing our overall cost of capital. We'll continue to take a thoughtful approach to capital allocation, ensuring we're maximizing sustainable long-term growth and driving value for our shareholders. I'm excited to work with Tyler, the leadership team, and our talented finance organization to build on Cipher's strong momentum. To begin, I'd like to remind everyone that today I will be discussing our performance for the third quarter of 2025, which ended on September 30th. I'd like to highlight that this quarter was marked not only by strong execution as we officially expanded into our HPC hosting and grew our pipeline, but also by disciplined capital raising that positions us to sustain and accelerate that momentum moving forward. During the quarter, we completed our second convertible offering, an upsized private placement of $1.3 billion of 0% convertible senior notes due 2031. This transaction reflected strong investor demand and confidence in Cipher's long-term strategy. The notes were issued with an initial conversion premium of approximately $16.03 per share, representing a 37.5% premium to our stock price at issuance. We also entered capped call transactions that increased the effective conversion price to approximately $23.32 per share, substantially reducing potential dilution to our shareholders. The net proceeds from the offering were used to fund the cost of entering into the capped call transactions and will be used for construction at our 2 currently contracted HPC sites, to advance our HPC strategy across our now 3.2 gigawatt development pipeline, and for working capital and general corporate purposes. Importantly, this financing bolsters our balance sheet and reflects our disciplined approach to growth. We're very pleased with the market reception and believe this transaction positions Cipher well to capture the significant opportunities ahead in HPC and digital infrastructure. Let's now turn to a review of our financials, beginning with our sequential financial performance outlined on slide 14. In the third quarter, our hash rate increased by 40%, driven by the energization and ramp-up of our Black Pearl facility, where phase 1 of the 150 megawatt front-of-the-meter site came online in June. Black Pearl began the quarter contributing approximately 3.4 exahash per second and ramped up to approximately 10.1 exahash per second during the quarter. This led to a 35% increase in production, as well as an increase in our electricity cost per Bitcoin, given Black Pearl is a front-of-the-meter site. The higher cost per Bitcoin was also driven by an increase in network hash rate over the quarter. Moving down the slide, we reported $72 million in revenue, up 65% from $44 million in the prior quarter. This growth was driven primarily by the increase in Bitcoin price and the increased production from Black Pearl. For the quarter, we reported a GAAP net loss of $3 million, or 1 cent per share, compared to a net loss of $46 million, or 12 cents per share in the prior quarter. We are proud of the substantial quarter-over-quarter improvement in our results.
Guys, just want to remind you, this is the money they're earning from Bitcoin right now. This is not the thesis. So don't worry about switching from profitability to non-profitability when it comes to this business. The real alpha in this business, as well as IREN and NBIS, is really the build out for AI, cloud, and infrastructure. That's where it's at. So this is somewhat important now, but what's more important are the announcements they're going to make, the questions they're going to be asked in their earnings call regarding these deals they're signing, because I'd imagine a lot of the analysts are going to ask about those, and this isn't the main concern. So just want to keep the new listeners abreast of that one.
This quarter, as part of the execution of our HPC lease at Barber Lake, we granted Google warrants as compensation for their commitment to backstop the lease payments from our tenant Fluidstack. These warrants are recorded at fair value, and as a result, this quarter we recognized a $32 million gain in change of fair value of the warrant liability. Excluding non-cash expenses, such as the change in fair value of our power purchase agreement, share-based compensation, depreciation and amortization, deferred income taxes, the change in the fair value of the warrant liability, and non-recurring losses, we reported a third quarter adjusted earnings of $41 million, or 10 cents per share, up roughly 34% from $30 million last quarter. Cash and cash equivalents increased significantly, driven by the $1.2 billion of net proceeds from our most recent convertible financing. Let's move on to slide 15 and take a deeper look at the results of our operations. For the quarter, we mined 383 Bitcoin at Odessa and 246 at Black Pearl, bringing our total production to 629 Bitcoin mined in total across our wholly owned sites. This production generated $72 million in revenue at an average price of roughly $114,400 per Bitcoin. This compares to the 434 Bitcoin mined in Q2 2025 at an average price of $99,700 per Bitcoin, resulting in $44 million in revenue. G&A expenses, which include IT, corporate insurance, professional fees, and other public company costs, decreased slightly both sequentially quarter-over-quarter and year-over-year. Depreciation and amortization expense totaled $60 million, up from prior periods, driven by the deployment of new mining rigs over the last 12 months. Our oldest rigs in the fleet will be fully depreciated in Q4, but those rigs can remain productive and continue to generate attractive returns when deployed strategically. We recognized a small unrealized gain on our Bitcoin holdings this quarter, compared to a $17 million gain in Q2, reflecting a modest increase in the spot price at quarter end. We finished the quarter holding approximately 1,500 Bitcoin in treasury. On our non-GAAP reconciliation, we reported a GAAP net loss of $3 million. Adjusting for $44 million in non-cash and one-time items results in adjusted earnings of $41 million for the quarter, up from $30 million in the previous quarter. Now let's turn our attention to the balance sheet. On slide 17, total current assets at quarter end were $1.4 billion, up from $220 million last quarter, driven primarily by the net proceeds of the $1.3 billion we received from our convertible offering. In addition, we held $170 million of Bitcoin. As we have discussed in depth on our previous earnings calls, we actively manage our treasury, neither selling nor holding every Bitcoin mined, and we remain disciplined in our approach to capital management. I'll quickly cover some additional balance sheet line items as of September 30th. PP&E totaled $650 million, up 37% from $474 million. This increase is primarily related to equipment deployed at Black Pearl. Deposits on equipment of $8 million, down from $183 million last quarter, is primarily related to the reclassification of rigs at Black Pearl from deposits to in-use property and equipment. At the end of the third quarter, our equity interest in the Alborz, Bear, and Chief JVs stood at $42 million. Moving down the balance sheet, derivative assets were up primarily due to the inclusion of $90 million of capped calls associated with the new convertible note, which raises the effective conversion price of the convertible debt and effectively minimizes potential dilution to shareholders. Current liabilities increased this quarter due to the short-term classification of the Google warrants associated with the fluid stack lease at Barber Lake. Lastly, and importantly, I want to highlight that short-term borrowings remain at zero. We continue to manage the balance sheet conservatively, ensuring we're well-positioned to meet any capital needs. Before we conclude, I'd like to thank everyone for joining today's call. We're proud of the tremendous progress we've made this quarter and the transformative growth we've achieved as we continue to expand our business lines, grow our pipeline, and strengthen our balance sheet to support that growth. As always, we remain firmly committed to disciplined execution, capital efficiency, and delivering long-term value for our shareholders. Thank you for your continued support, and we look forward to updating you on our progress of the next quarter. At this time, I will pause, and Tyler and I would be pleased to take any questions.
Thank you. As a reminder, if you'd like to ask a question, please press star
Q&A,
11.
guys.
If your question has been answered and you'd like to remove yourself from the queue, please press star 11 again. Our first question comes from Paul Golding with Macquarie. Your line is open.
Thanks so much, and congrats on the announcement and all the progress on HPC. I wanted to start off with a question around the deal itself. 300 gross megawatts. Stingray, you have on track for energization, 100 megawatts in 26, and Barber Lake, you have 56 megawatts after the fluid stack deal. How should we think about the distribution of power to deliver the 300 megawatts, as well as maybe pricing across liquid and air-cooled since you're delivering both? Looks like averaging out the deal is about $1.7 million per critical megawatt on my back-of-the-envelope math. If you could just talk through some of those deal points on pricing, as well as how you plan to deliver that capacity across your fleet. And then I have a follow-up. Thank you so much.
Sure. Thanks, Paul. Thanks for the question. So let me start with the framework that the ink is still drying on the deal we signed with AWS. So there's some element of finalizing basis of design involved in getting you the exact numbers that will be represented. So they are taking 300 gross. We are recutting an existing air-cooled 150 megawatts. So there will be a quick time to market with the first phase of that build. The second build, we are still finalizing design, and some of the debates that are happening are between speed to market, so speed to availability of the compute, versus optimizing for highest critical IT load possible. That's not finalized yet. So I'd say that in general, if the whole site ends up air-cooled, the PUE will be in line with the design we've got at Barber Lake, which shakes out at about 1.4, 1.45. Depending on the balance of what might be used with more of a liquid-cooled approach, we could improve that by having the second phase have a lower PUE, a more efficient PUE. So still shaking out exactly where those numbers will be. As far as cost goes, which you referenced, it would be in line with, again, Barber Lake, what we've done in the past. We would expect the cost per critical IT megawatt to be in line with that estimate.
Thanks so much, Tyler.
If not better, because we do have some infrastructure in place already that was bought in a cheaper market.
Got it. Appreciate that color. And then you also mentioned debt financing as a majority of CapEx sourcing and then cash on hand. Are you able to give any more detail around financing plans in terms of you're already developing the fluid stack capacity? So is this cash on hand from prepayment deposits? And is there any kind of backstop here to help support project financing and going to market for that?
Let me give some high-level framework for that, and then Greg can chime in if he wants to talk about any specifics. So two different structures. Obviously, the first deal is with FluidStack and Google. That structure looks similar to one that's been out there in the market. Fair to say we'll be looking to pursue our debt financing options for that in the coming days and weeks. And I would expect, depending on where the market is, those structures are not too dissimilar. So, that's how we would envision probably how that shakes out. On the AWS lease, that is a direct-facing hyperscaler lease. I think it's the first of its kind among anyone that has converted from Bitcoin mining to do a long-term, 15-year direct-facing hyperscaler lease. That should be very financeable. As far as the sort of equity support for whatever shakes out in the final terms for that financing, keep in mind we upsized the convert we did recently quite a bit. The market was so favorable that it went up all the way up to a $1.3 billion offering. So we already have a fair amount of excess cash on hand, and by all estimates, we've got that should support what we would anticipate to be the equity piece of the financing to build the structure related to the AWS lease. Greg, would you give any other further color, or is that enough, do you think?
Yeah, I mean, Tyler, I think you said it right earlier, is that we're not prepared to give specifics on the financing that we're looking at for the Google FluidStack deal, but we are exploring opportunities, and we'll be hopefully updating the market in short order. As it relates to the AWS deal, we think that there's going to be a lot of opportunities in front of us to explore different types of project or construction level financing, and we're going to work through those options and make sure that we're making the right decision.
Thanks so much.
Thank you. Our next question comes from Greg Lewis with BTIG. Your line is open.
Yes, thank you, and good morning, and then thank you for taking my questions. I guess the first question is around, the additional sourcing of power. Congratulations on that. It seems pretty tough. Tyler, as we think about, and you're talking about things accelerating and kind of what's possible, could you kind of ballpark, how things are progressing at what you're seeing at ERCOT? You have the different the M's that you referenced, 500 megawatts. When did those get in the queue? Obviously, we have some power coming online in 26. Just kind of an overall update on how we should be thinking about availability of power from that growth pipeline that you have.
Sure. So let me give some color as it relates on the sites that are awaiting final ERCOT approval. So a lot of this shakes down to, so first of all, they've been in the queue for a while, and all load studies and everything have been submitted. A little bit on the timing expectation shakes out to the sort of business operating model of the particular transmission distribution service provider you're working with. So in the case of Colchis, we're anticipating a 2028 energization. We have already paid a kayak, so construction and advancing construction payment to assist with the work that the TDSP has to do. That's with AEP, and AEP is confident moving forward with that construction based on an expectation of having that site energized by 2028. So then that's where we are there. I mean, construction will be progressing on the AEP side, and we are in live discussions while they await that final approval from ERCOT. At McKeska and McLennan, we have signed interim FEAs. So that's a requirement of the TDSP there, which is Encore. So In those cases, again, the deposit's paid, but the construction will likely begin on the Encore side once that final ERCOT approval is in hand, which we're anxiously awaiting. And then Milsing, we have not paid a deposit yet. Again, working with a different TDSP there. Their process works a little bit different. So that's kind of the overall picture. And as far as ERCOT goes, it's hard to make any prediction with exact specificity. But given the progress in the anticipation of where we think those sites will be available on the feedback from the TDSPs, we're confident in the timelines we've given.
Okay, super helpful. And then on the optionality of the 56 megawatts, I think you mentioned potentially, maybe offering your own, AI cloud services. Could you talk a little bit about, how we're thinking about that in terms of, just bringing on another customer? Maybe there's an option that could be extended. Just how we should think about that 56 megawatts and maybe around the timing. Is this something we want to kind of have buttoned up in the next 12, 18, 24 months? Or, hey, it's out there and, time is on our side?
So the answer is it depends. I think, we've had a lot of questions and interest around the idea of owning and operating our own GPUs and then selling the compute to an off-taker. I think in general, we have been progressing slowly on that front because we want to make sure we're getting the best risk-adjusted returns for the megawatts we've got. So obviously, you can produce numbers that are higher on the revenue side if you're selling compute, but you're taking on a whole bunch of risks, much larger financing risks, GPU lifecycle obsolescence risk, et cetera. I do think a key to making that business very attractive would be to lock up a long-term offtake with a highly credible counterparty for the compute. So we've seen those deals. We're looking at them. Candidly, I think the numbers we signed on our lease with AWS are better. I think we will probably both make more in terms of profits and with much, much, much less risk. So it still remains to be seen from our perspective what the best use of a megawatt is to make the most money. But we're in very active discussions and exploring all available business models. And obviously, as we sign up new 1 gigawatt sites, we're going to have a lot of optionality as things progress. As it relates to the specific 56 megawatts, I'm highly confident we will have some sort of deal there pretty soon. There is a lot of interest, both on using that capacity to operate our own GPUs and sell compute, as well as have it leased on a co-location basis. It's fair to say that this market is literally getting more frenzied by certainly by the week, if not the day. So rental rates on leases are going up rapidly. The level of interest is overwhelming. And so from our perspective, we're spoiled for choice. We've put ourselves in a very advantageous position. And so depending on which deals we think will produce the best risk-adjusted returns, that's how we'll proceed. But I do think the 56 megawatts there, as well as the 100 megawatts at Stingray, the 70 at Reveille, will all be taken up. If this market level of interest continues, we will not have an available megawatt. We have multiple parties interested in all those sites and locking them up as soon as possible.
Okay, thank you very much, and congrats on the AWS announcement.
Thanks, Greg.
Thank you. Our next question comes from Andrew Beal with Arete Research. Your line is open.
Hi. Can I just ask, what are you thinking about the design of Colchis, and what do you think the likely capex of that as a greenfield will be per megawatt? And just thinking about ERCOT approval, can you talk about what getting the Google Fluidstack and AWS leases does in helping your approvals at the other sites, such as the 3Ms, and how much difference partnering with AEP makes on that approval front?
Yeah, thank you very much for the question. So predicting the budgetary costs at Colchis is a little bit challenging, only because that's going to be number one, again, that's another one. The ink is still drying on the acquisition. We're beginning to have exploratory conversations with folks that are interested in co-location there, just given the size of it. But what we would do, I guess I'd say in the interim would be, we'll be deploying the CapEx for the minimum requirements at the site. So fiber, substation, land, water sourcing, et cetera. I would say I expect our build cost to be in line with what we've done at other sites if we are building the same co-location type access, which has generally been, call it $9 to $11 million for critical IT megawatt. Now, that said, there could be inflation, prices could change, supply chains, et cetera. I don't have any reason to believe that the cost would be different per megawatt other than just the passage of time and those factors. So we will be able to give more details in the coming months and quarters. I think that candidly, with an expected availability of power in 2028, given the size of Colchis, we hope to find a partner, before too long, just because that's a tremendous construction timeline and obligation. And so we'll have to get moving on it. But I have no reason to believe the cost would be any different. And then, sorry, remind me of your second question again. I got lost there.
Just about, signing these leases with Google and AWS.
How it changes us with,
3M and whatever approvals.
Thank you. There's huge benefits to these partnerships. I think, again, up until a few months ago, I can't tell you how many times we heard no one's ever going to sign at those sites. No one's ever going to sign, with a former Bitcoin miner, at least not a traditional hyperscaler. That discussion is now over, obviously. And, it probably won't be for us. It will be for others as well as other deals get signed across the ecosystem. I think every deal adds incremental credibility. We deserve a lot of credibility. Anyone that got to know the quality of our team, their experience, the things they've built in the past, and just looking at Cipher's own track record, if you took the word Bitcoin out and just said our team has delivered 5 data centers on time and on budget in this exact geographical region, there would be no reason to doubt what we say. It's just the traditional bias from incumbent industries against the word and Bitcoin. So I think every deal adds credibility with everyone. Deals beget deals. And I talked about this a fair amount, about striking our initial deals, focusing on the quality of the counterparty and setting our business up as a franchise such that we can extract the most value from the entire pipeline we've got. And I'm happy to say that that's exactly what we're seeing. So every conversation gets a little bit easier, and we have a lot more credibility on new leases with regulators, with transmission distribution service providers. And truthfully, that kayak I mentioned in the case of Colchis, which is actually scheduled to go out shortly, that's what matters to ERCOT, right? So having more credibility and having money invested in the space and being a credible counterparty makes a transmission distribution service partner want to move forward on your project and spend their own money because they're more likely to get paid. And the same on the ERCOT side. So all these things beget more success. And that's probably the biggest reason for optimism around here these days.
Great, thanks.
Thank you. Our next question comes from Michael Donovan with Compass Point. Your line is open.
Thanks for taking the question, Tyler, and congrats on the progress. I guess just in terms of supply chain, what are you seeing in terms of constraints for long lead assets?
Yeah, so listen, I think we've talked about this over the years, that we often work backwards in terms of what the long lead time items look like when we try to come up with a timeline. And as a high-level generalization, that keys off of getting your substation in place, and then downstream from there on the HPC side, it matters a little bit in terms of basis of design for the particular site, which is driven by tenant requirements. But as a broad generalization, if they want backup gens to be there to provide the necessary uptime, those tend to be the next gating item in terms of timeline. I'd say we have a great track record. Our team, keep in mind, like our construction team comes from places like Vantage and Whiting Turner and Google and Meta, and very experienced in dealing with procuring all the items necessary for these data centers and have relationships up and down the supply chain. To give you a sense, I think back of the envelope in terms of Barber Lake, over 85% of the equipment I think is secured, including all long lead time items. So this is a process in each build spec, and will continue to be that way. Generally, our risk now, and anyone's risk now signing these deals, is of course delivering the construction, financing whatever you're building, and then delivering the construction on time. Our team has an excellent track record of that. I have no reason to expect we won't have the best performance of anyone in the space in terms of on-time delivery. The supply chain is kind of a moving thing, but I think we're really well positioned. And on the builds we've got, we feel very confident on our timelines, which are aggressive.
That's helpful, Tyler. And then I guess my second question is a bit more esoteric. So I'm hearing discussions about sites being linked up to, let's say you have a 500 megawatt site here, 500 megawatt site there, to link them up to deliver 1 gigawatt campus for a specific workload. Are you hearing more of these types of discussions? And could we theoretically think of the 3Ms coming together for one large 1.5 megawatt or gigawatt campus?
I think it depends on how the market evolves. So there's no doubt that a lot of the hyperscalers seek sort of redundancy of data centers in the same geographical areas close together. I would say, look, we have a concentration of data center sites, now a dozen basically in West Texas. I think that I don't think of like the 3Ms as being geographically close enough, at least in today's construct, to think about linking them. I think it's beneficial that they're not like way far away, but I don't know that that's necessarily how folks would think of them. That phenomenon definitely exists, but I'm not sure I would group our sites in that manner. I think there's a lot of other efficiencies of scale of having, a workforce in that geographical area, et cetera, that it's great to have things concentrated, but we don't have sites that are necessarily, 10 miles away or something like that. They tend to be a little bit further. Colchis, for example, is about, I think 80 miles away from Barber Lake. I mean,
Okay.
I'll say at a high level, we have those customers do like to have a conversation about potentially constructing their own availability zone, but we're not far enough along to say exactly like it would be these sites that would be, like dedicated for that one tenant.
Great. Appreciate that, Tyler. The last one, I promise. So great progress at the edge of the earth. What should we think about outside of Texas?
So great question. We are always looking at opportunities. We just happen to love Texas, and it seems that we always find the best opportunities. I do think that part of it is that there's a lot of things. Business is great in Texas. It's a great place to do business. It also has a history of, risk takers and entrepreneurs that want to speculate on early stage opportunities. I think it echoes oil and gas somewhat in that there are folks that will speculate on grid interconnections and take a risk on being able to get something. And maybe Cipher's secret sauce, to be honest with you, now that we've originated 12 sites down there, is that we have a team that has demonstrated excellence at sourcing these sites from what I'll call kind of grid wildcatters or people that are early stage investors in an interconnection opportunity, but are not prepared to develop the site, at a high level that would be ready for an end user like a hyperscaler. I would argue that Cipher is basically the only firm. Maybe we have a handful of competitors, but I think we certainly do it best in that we can speak very credibly with that audience that originates these sites, and at the same time, go have an all-day technical meeting with our entire construction and operations team with a hyperscaler and impress them as well. And so bridging that gap between, let's call it early stage speculation on grid opportunities, and then delivering that to the highest quality end user we have in-house. And honestly, that's why I believe we're a tremendous growth stock opportunity. We're not just a basket of assets. The point being, we're not going to stop developing these sites. Now, to answer your question more directly, however, because I was just saying how wonderful Texas is, yes, we are looking at sites, particularly in PJM. Historically, we've looked at sites all over the world. Often the economics haven't gotten to a position we like to be in. We do have a relentless focus on risk-adjusted returns here. And so often things are either too risky to justify the investment, or perhaps the price is too high, they're too mature, there's not enough risk that we feel like we can quantify better than others. So we are looking at PJM. That's a market we would like to expand into, and stay tuned. I hope that we'll have announcements in the future.
Thank you. Our next question comes from Mike Colonnese with H.C. Wainwright & Company. Your line is open.
Good morning, Tyler and team, and congrats on the two big HPC deals here. Really great to see. I can appreciate the expected delivery timelines you provided with regards to the two contracts, but how should we think about the revenues layering in over the course of 2026 and beyond from the two agreements?
Yeah, so the full delivery of the FluidStack Google deal is expected to be completed at the end of September next year, and so rent begins in October of 26. Amazon is, again, getting finalized, but it begins in August of next year. And then there'll be stages, though. The second stage would be closer to year end of next year.
Got it. And then more of a high-level question, Tyler. In your view, what has changed for counterparties that has accelerated the pace of deal announcements we've seen in the space for the past month or so? It feels like the level of urgency from the hyperscalers, neoclouds, and some others has really picked up, and from where we were just a few months ago. So it'd be great to get your thoughts there.
Yeah, I mean, it's fair to say that in my 25-year professional career, I've never witnessed anything close to what is going on in the market right now. You asked why. I don't know. I listen to the podcast like everyone else and hear the CEOs of hyperscalers talking about a shortfall. My sense is that if you are a big diversified cloud provider, it is easier to predict your capacity needs for the traditional cloud business out several years. I think the thing that has snuck up on everyone is the just meteoric rise in demand for AI. And what is happening now is not only is that demand off the charts, there's a scramble because those folks underestimated how much they need quickly. And of course, there's a little bit of a race between them. So, right now discussions are beyond, every discussion starts with, we want megawatts that are available right now. It has now become, we want anything in 26, and that's now become, we want anything in 27. Literally week over week, the tone changes and gets more excitable and in higher demand. And, look, lease rates are going up, as you would expect in a market like that. I'm very happy with where we put our markers down to have the best possible anchor tenants in the world for our business. I think we have now some pricing strengths on our side to improve economics and improve deal terms. Again, the first 15-year long-term lease directly with a hyperscaler in our space, not only a hyperscaler, the biggest hyperscaler, demonstrates just the balance of power coming to those with the scarce assets, which we very strategically arranged over the last few years. So, I don't know if that level of frenzy can continue forever, but we do feel a little bit like the tip of the spear here, just with what we get insight into. And I've been saying it for a while now, but the demand is just off the charts and only seems to get more off the charts.
Really interesting, Tyler. Tyler, appreciate your views.
Thanks, Mike.
Thank you. Our next question comes from Joseph Vafi with Canaccord Genuity. Your line is open.
Hey, guys. Good morning. Congrats on all this great progress, and welcome on board, Greg, and congrats, Ed, on your retirement. Just a couple here. Just maybe this is the most updated thoughts here, Tyler. on your behind-the-meter agreement and what comes next here for Black Pearl, given that site and its unique power procurement and the expiration of that deal, and then overlay on top of that, obviously, everything going on in the HPC environment. And how does that site evolve from here?
Joe, do you mean Odessa? You said Black Pearl,
I'm sorry.
But our behind-the-meter PPA is at Odessa. Okay. Just wanted to make sure I was answering the correct.
California. Yeah, absolutely.
Sorry for the before the market call. So yes, at Odessa. So for just as a reminder, we have a PPA at an extraordinarily cheap price for electricity for 207 megawatts at our Odessa Bitcoin mining facility that runs through the end of July 2027. That contract is extremely valuable. It is way in the money. We're carrying it at a decent value on our balance sheet. And that's because the price is fixed and so cheap for a while. It's fair to say that in these conversations that are frenzied for more power available now, we get a lot of interest in saying, hey, would you ever think about converting that site? I think where we're sitting right now is that given our extraordinarily cheap cost of power there, mining Bitcoin is a fantastic business there. HPC over time could be interesting there, but we're not in any rush given how strong our contract is and just what that implies for Bitcoin mining economics. I think it's fair to say it could be a really good site. It is co-located with a natural gas generation facility that is owned by Vistra. And as things evolve, again, in relation to a question I answered earlier, as our credibility grows in the space, I think it's fair to say that more big names across the spectrum will look to Cipher to provide their data centers. So there is the possibility that something happens there. We would have to coordinate with our power provider, Vistra, and coordinate with a potential tenant. But we're not in any rush, just given that the economics are locked in at very favorable levels there for another year and 3 quarters.
Sure. Thanks, Tyler. And then just really quickly, I may have missed it, but this deal with Microsoft, is it going to be at one particular site, or is it going to be distributed? I just don't know if I saw that in the press release. Thanks.
So we haven't done a deal with Microsoft yet. I know it's confusing today because I think
I'm sorry. Yeah, I'm getting them all confused today. There was another one. Yeah, Amazon. Sorry about that.
No, that's fine. Amazon is at one large site that needs to convert from a Bitcoin mining facility to HPC.
Right, but you haven't said which site it is yet, I guess.
Yeah, it's at the Black Pearl site.
Okay, great. Thank you.
Thank you. And our last question comes from John Tadero with Needham. Your line is open.
Great. Thanks, guys. Congrats on the lease. The timeline seems pretty quick on getting that Black Pearl site for AWS delivered. Just wondering kind of if I'm missing something or the confidence in being able to deliver that. And then I have a quick follow-up.
Yeah, so confidence is very high. Again, a lease like this is the result of a lot of deep technical meetings with their team. Keep in mind, at that site, we have built 150 megawatts to an extraordinarily high level of building quality. That is not like our other sites where we had a more limited timeline and we may have used like a containerized solution. That it was always built with a long-term eye towards being convertible. I'm happy to say that, again, most of that site is immediately reusable on phase 1 for 150 megawatts. So that's what drives that aggressive timeline on the phase 1. And the phase 2, again, that's just relying on the conversations we've had, going through a procurement exercise and scoping out a supply chain timeline. So I think we can easily meet it. But that aggressive timeline is largely based that we're reconfiguring a site that was just built to a very high standard.
Got it. That makes sense. And then my last one, just when you're procuring a site like Colchis, who are you competing with? Like, obviously you're signing the major hyperscalers. Are they looking to build out some of their own sites at this point too, or is it mostly, I guess, maybe other Bitcoin miners you're competing with?
Yeah, so that's a great question. And again, I sort of alluded to this earlier, but this is, I think, the underappreciated growth equity aspect of our company, which is doing deals like that requires real local knowledge and understanding. This is like dealing directly with, by analogy, a wildcatter, right? Typically, the hyperscalers are much more used to, first of all, they're big institutions that move, they're not quite as nimble as we are. But second of all, they're used to, Jones Lang LaSalle bringing them a prettied up deal deck for a completed data center or site that is very polished and ready to present to them. They are not going local to understand the local requirements and dealing with whatever hairy situation there might be on some of these deals. We're, I would argue, certainly the best, if not the only company that has extremely high levels of credibility with that crowd for getting deals done, but also the ability to talk to hyperscalers. So there's like layers of capital that come to a traditional commodities production business that just don't exist here. So we don't see as much competition from them at that level, and that's really part of our value.
Yep, got it. Understood. Thank you for that. Appreciate it. Congrats again.
Thank you.
Thank you. That's all the time we have for today. I'd like to turn the call back over to CEO Tyler Page for closing remarks.
Well, thank you, everyone, for joining today. I want to call out Ed Farrell. Ed Farrell has been my right-hand man since day one at Cipher. We've had many internal thank yous and congratulations on his retirement and transition to senior advisor from Chief Financial Officer. But I wanted to take this opportunity to give a special investor thank you. As one of the largest shareholders of Cipher, I want to say thank you for all of us for the hard work he's done. I can tell everyone that's a shareholder, we would not have made it here without him. He's been amazing, and it's very exciting to get the company to where it is today on the back of his hard work. It's hard for me to believe that I'm not going to be able to walk around the office and have obscure Godfather references anymore. I'm not going to be able to hear from him, or I'm not going to be able to tell him, rather, that, the Don needs to hear bad news right away. And I think every time I run into an obstacle that frustrates me, I'm not going to have Ed here to remind me that, Tyler, this is the business we've chosen. But we are in great hands with Greg Mumford, our new CFO. And when we think about all the capital raising and optimization we've got to do going forward, we are in excellent hands. So thank you to Ed on behalf of all shareholders, and we wish you a fantastic retirement. Thanks, everyone. We'll talk to you soon.
Thank you for your participation. You may now disconnect. Everyone, have a great day.
Guys, we just got news from Amazon. Can this morning, just no news for like 30 minutes, just to kind of rake it all in. It doesn't end. It doesn't end. And it's all data center related. All of it. A lot of people got bearish last week, thinking that was the top. A lot of people got bearish the week before, thinking that was the top. A lot of people got bearish when Trump had the China announcements, or the China tweets, where the market dropped about 2% plus in just a matter of a few hours. Including myself, I got a little bearish, but obviously did not sell anything. But here we are today. We're getting deal after deal after deal. Okay, so that was a long earnings call. Lots of details in there that were already shared with everyone. But I think that there was a point on the earnings call where he might have slipped a little bit. Tyler, the CEO, might have slipped a little bit where he mentioned that they have relationships with Meta. And I'm going to bring it up. I did post about it. I commented on one of Mike Alfred's posts about it, but I'm not sure if that was a Freudian slip, or maybe he's just saying that they have a relation with Meta. But we do know that they have the Google backstop for the Fluid Stack deal, and just to kind of cover that one a little bit, as I mentioned before, Cipher does not provide a software cloud for clients to use. They just provide the hardware. They provide the co-location, they provide the rack space for people who want to co-locate, which in this case is Fluid Stack. And they own the top to bottom when it comes to everything beneath the software, not the software itself. But Tyler did say that that could be an option in the future. It just depends on the ROI, right? So it's a very CapEx intensive business. Does it make sense? Do the numbers really make sense for them to actually start up a cloud service and offer this to clients? Right now, that he didn't really give away any information saying that they are planning to do it. He said it's an option. I mean, clearly the market is asking for it. Will it happen? I don't know. But is that priced in? It is not priced in if they do decide to do that. So I'd imagine if they do decide to go into the cloud route, that would be very bullish for the company. Now, is that something to buy the stock for today? Well, I mean, you have IREN that already offers that. You have Nebius that already offers that as well. Like I mentioned earlier, Nebius doesn't own the land and the power and everything for all of their sites. They do some co-location with some of their sites. IREN is a pure play when it comes to that. But again, Nebius is diversified in other businesses as well that are already doing very well. So, what do I expect, or am I buying Cipher because I want exposure to that company that is providing that cloud software and software stack on top of their hardware? No, that's not the reason why I'm buying Cipher. I'm buying Cipher because clearly, like with the AWS deal and everything, I had traded Cipher several times in the past, but I did buy it pre-market right after the AWS news came out. And it's certainly not a big position. IREN and Nebius are my bigger positions. Nebius being a much larger position, but IREN, I think, is before this pop. I think it was about a 3%, maybe a little bit more than 3% position. Nebius is like 15% of my portfolio. So we're at a starting point with IREN, which is around where I started Nebius at. And Cipher is like 1.5%, maybe 1% 1% of the portfolio. So, is that Amit? That's not Amit. Same name though. Nice name. Can you also talk about these helps Meta in any way? I mean, this doesn't really change anything with Meta. Meta is, they might go into cloud computing. I mean, who knows? Right now, they're expanding the infrastructure to support all the services that they do provide for all of their 3 billion plus daily active users around the entire world on their family of apps. So they need to build out that infrastructure. And Mark had said during the call, I do think that a lot of people got a little bit concerned about it because it did sound like Mark Zuckerberg was talking about it from a defensive standpoint versus like kind of discussing the alpha and what they're doing. Is that like, look, we're building out all this infrastructure, and if it's too much, then we'll still use it, right? And it's like, I don't know if I want to hear that as a shareholder. I mean, I don't really care, but I think like certain people didn't really want to hear that. Whereas like, hey guys, I mean, maybe we're spending too much, but if we do, then that's okay. We'll still use it for something else. And it's like, I don't know. It just kind of seemed like he was a little defensive when he said that. But anyways, does this news particularly provide for the thesis for Meta? No. Meta is, their operating cash flows and operating income are just extraordinary for a company of their size, and that's continuing to grow. I provide a chart for that over the weekend. You can go ahead and check out my profile on X. But this doesn't really build on that thesis. Like that thesis is separate alone from these. Okay, so let's go over a few things with the news that actually just came out. One, this literally just came in through the tape right toward the end of the call. Amazon signs a $38 billion deal with OpenAI for NVIDIA GPUs. Okay, and Amazon it almost hit 260. Right now, Amazon is at $257. And let me see if I can get this over here. Yeah, Amazon is just ripping after our pre-market. Guys, this is a big move. This is a 5% move for a company that's $2.6 trillion, right? So that's like $130 billion move right there. I mean, Cipher is up a lot pre-market. In fact, I think they're actually hitting, they're hitting new pre-market highs, which is great. Cipher is a $7 billion company, right? Like clearly, like they're not going to move $130 billion pre-market because this would be like a $200 stock if that happened, maybe more. But like these deals are very good for the company. What is this? Toast is actually up. Oh, it was up 5% last Friday. That's good. They're reporting this week as well. So what I think some people might be wondering, like, why isn't Cipher up higher, right? Well, because the market needs to digest this. Also, there's not enough liquidity pre-market in order to pump a stock up. I'd imagine when the market opens, it's probably going to go higher, as long as the momentum continues. But right now the Qs are up. The Qs are up a lot pre-market. They're up almost 1% pre-market for the Qs. Bitcoin is just falling off a cliff over the weekend. S&P 500 futures is up 40 basis points pre-market. So, I mean, we just got so much news when it comes to Cipher. Like I already mentioned, they did have a good earnings report, but the details are really in the announcements with AWS, $5.5 billion in access to infrastructure and lease deal. Of course, the excitement from the earnings, the stock was like around $20. But then after that announcement, which is also included in the earnings, the stock basically just skyrocketed higher. And the earnings call was actually really good. They went a bit more into detail, which I do need to look more into as far as like dissecting every single little piece of the entire earnings call, but also the press release and so on. Like literally, I woke up to all this, so I need like about 24 hours to digest all this information. But the earnings call was good. He sat the CEO Tyler Page sounded very confident in everything he was saying. He was saying they have a lot of optionality if it comes to getting into AI cloud. If they want to later on, obviously they have to calculate all of those numbers to see if it's actually worth doing that. Like just because they don't do it doesn't mean that it's bearish or anything. This is still like what a $9 billion company, and they signed a $5.5 billion lease deal with AWS. That's like almost half of its market cap pre-market. Like this is kind of reminds you of like with Nebius, like where Nebius signed like with Nebius, it was a much larger deal, $17.4 billion. And at the time the company was worth like $20 billion, right? And that stock was up 40%, 40% immediately. And Cipher is up like 23% right now. And could it be up when the market opens? Who knows, right? But I think it's pretty early when it comes to these companies. That's why I had no problem starting my position like around $20. When I start a position here, I mean, it has to be long term, right? You can't buy over here hoping that it's only going to go straight up. Like it's going to be swings up and down. Of course, if the market ends up being down today and gives up a 1% gain on the Qs, like I don't know, who knows, Cipher might end up going red. We'll see. But you got to be thinking long term when it comes to buying these companies over here, right? And it could go more, it could not. But I mean, 23% move pre-market is no joke, right? There's clearly some institutional buying there pre-market, and I imagine it's going to continue into the open. So, like I mentioned, the Amazon deal with OpenAI. What was the exact figure again? It's $38 billion. Amazon is up. Amazon is almost $260 pre-market. And then we got the IREN news with Microsoft and Dell. And, it's not nearly as high around. It was up about almost 30% earlier when they first initially released the news. And it's pulled back quite a good amount. Just the liquidity pre-market, right? So we'll see what happens when the market opens. But, I mean, this doesn't change anything in terms of the long-term thesis. In fact, it actually helps the long-term thesis. And yes, someone said Amcor is actually ripping pre-market as well. Because what does Amcor do? Amcor basically assembles all these chips and tests them for TSM and Apple, largest clients. If you have all these new chips that need to be built to power all these data centers, you're going to use Amcor, especially if we're talking about from Texas to Arizona. Might be much cheaper for these companies to use Amcor instead of just doing it from their internally or hiring another third party to do it. So, man, this is just bullish for everything. So, what are the long-term prospects for Cipher price predictions? I don't know what the price predictions are going to be, but right now the company's about $9 billion to $10 billion. They signed a $5.5 billion deal with AWS. That's about a 15-year lease agreement. That's not the only one. They also have FluidStack, backstopped by Google. Google owns 5% stake of Cipher. So I think there's going to be more. There's going to be more. There's going to be many more deals to come. I don't think this is the end. What are the price predictions? I'd imagine if this momentum continues, I'd imagine to be higher from here. The market's got to stay bullish. If the market isn't bullish, like if we have a bear market, like these stocks are going to go down. I don't care what the news is. These stocks will go down. The Wall Street will figure out some news to release where these stocks go down. Like it's hard. If we're in a bear market, then that means you are against that. That means the market is bearish on the thesis. The thesis for AI is not strong enough to bring the market down, and therefore everything that's related to AI is going to go down multiple times the SP 500. So you got to be ready for that in case it happens. But I would say that long-term wise, like this is all just going to be minuscule movements from what it's going to be later on in the future. So we will see. Yeah, NVIDIA is partnering with everyone. They are, man. I mean, Jensen Huang is he's crossing his arms with Samsung co-chairs and drinking beer and eating chicken and handing it off to the audience, carrying people's dogs and stuff. Like it's just like this guy's like on cloud nine. Like it's not even cloud nine anymore. It's like he's just up there, man. Like he's just having a great time and he's putting his face in everything, which is the most important part when you're the most expensive company in the entire world. So I think that does it about it with all the crazy news that happened this morning. I believe there was also news with MongoDB. Yeah, there was MongoDB CEO. Yep. MongoDB CEO is basically getting replaced by the old. Actually, he was part of ServiceNow, CJ Desai, and then he joined Cloudflare, and now he's now he's going to be the CEO of MongoDB, which is very interesting because I mean Dev has been around for a long time. But CJ definitely is a strong name in the business. And this is going to, in my opinion, like when you see moves like this, you get a lot of people who are very critical on AI when it comes to, sharing the wrong tab, when it comes to the profitability or inflection with software. Like, why are we building all of this hardware and data centers? Because it's for software and enterprise. If companies are not paying the Snowflakes, the ServiceNows, the Salesforce, and everything for all of this compute or for all of the software, then like what really is the return on a lot of these products, right? Obviously, you have companies that are building their own products out there, but that is ultimately software. You have the end user or you have the enterprises that need access to the software that's utilizing this advanced compute, which is very high in demand. And if that software does not turn its ground, which it looks like you have CJ Desai, who's one of the executives at Cloudflare, previous executive at ServiceNow, who's become the CEO of MongoDB, which is all data, kind of tells you something where it is, right? And then you had the COO of Shopify become the CEO of Opendoor. And Opendoor is an interesting one. I'll get to that one probably in another podcast, but maybe that's going to hit an inflection point, right? And then you have Robinhood partnering with Sage Home Loans to offer cheap. Like how can Sage Home Loans offer 0.75% lower mortgage rates to gold subscribers if they couldn't figure out those margins, right? So, man, let's just take this in. Like we're definitely heading places here. I actually want to see where MongoDB is up pre-market. Oh wow, they're up 8% pre-market. I'm not surprised. I mean, there was a lot of people who were criticizing Dev. I think Dev was a great CEO, but I don't think he was ahead of what the market wanted. And this is definitely good news because you have someone like CJ from Cloudflare and ServiceNow who's now going to be leading the company. That's pretty bullish, man. That's pretty bullish. So, oh, wow. Cipher is well into the $20, $3 range. We'll see. So, guys, I'm going to dissect this a little bit more. We got the market open at 623. I'm gonna sign this one off, and I'm going to watch Amit stream so I can continue to take a look at these earnings. Man, what a crazy morning, guys. Hope you guys enjoyed this one. So we're actually, let me just go over one more thing before I end. I'm going to be doing more streams this week, and specifically, where is the calendar? Oh, Fubo actually reported earnings. Okay, so Fubo is hold on. Oh my goodness. I need to open this up in the other one. One sec, guys. Let me share my other screen. Okay. So where is that other window? Let me see where Fubo is at, actually. Fubo is up 3.5%. Not bad. Not bad. Good gravy, guys. This is going to be a crazy market open. This is going to be a crazy market open. Whew. All right. So we have additional earnings this week. I'm not going to be streaming the earnings after hours. You guys can go ahead and check out Amit's market close. He's going to be streaming Palantir, which is, I mean, just a glorious call in there. Amit actually released a Substack article for NBIS, which I need to look into. I did skim through it recently, but I want to check that one out. I think and he also released one for Grab as well. I'm going to leave the link for you guys. Amit's Substack is free for everyone, so you can go ahead and check out his Substack over there. And he also has his Grab Substack in there, but he basically does a deep dive. And it's actually very interesting because Amit's really getting into the neo clouds and the AI cloud companies. So maybe I'll make an appearance in Amit's podcast soon to just talk about all the crazy news that's been happening. But with that being said, I wanted to go over some stuff. All right. So we got Cipher. We did Cipher this morning. We have HIMS, Palantir after hours today. Tomorrow morning, we have Shopify, Hut 8, Uber, and Spotify. Hut 8 is another B2C mining company making a pivot. I need to look a little bit more into them. I don't know if I want to buy a position in them. I already have exposure to what I think are the strong players. Will I stream tomorrow morning? Probably not. But I am going to stream the earnings on Wednesday morning because we have Lemonade. Lemonade's a big position of mine. They basically disruptor for auto insurance utilizing AI, and Unity is also reporting as well. And then Wednesday after close is AppLovin, Hood, QCOM. QCOM's gonna be an important one. We're gonna hear more news on it. Yeah, that's right. Grab is tonight. I'm not going to. I'm not gonna be streaming tonight. I'm gonna go ahead and let Amit do what he does the best. But I am going to be streaming the Lemonade earnings on Wednesday morning, big position of mine. And I'm also going to be streaming on Thursday after close for the IREN earnings. That's going to be a big one. That one's a decent sized position of mine as well. But yeah, guys, gonna head over to Amit's stream to watch. We'll see. Maybe he's gonna want me on to talk a little bit. But yeah, guys, thanks for coming in. Again, apologize for being late this morning. I put it was supposed to be at 3:50 a.m. or 6:50 a.m. Eastern time, but I pushed it back to 4:40 a.m. Sorry. I'm thinking in my time zone. I pushed it back to 7:40 a.m. because it just really made no sense. I should have been on earlier because then it would have been pretty crazy, right? Catching all the stuff. But anyways, guys, thanks for tuning in. Looking forward to seeing the rest of you on Wednesday morning. I will talk to you guys later.